Hello, everyone. See a lot of people in the class today, so I hope you all were safe. I did have some stories of my first class students injuring themselves, and that's always kind of bad news. I've been fortunate with the ice, and I don't think I've ever seriously injured myself. I think I slipped one time and kind of scraped my. That wasn't too bad. Obviously, a very big concern. For those of you online, I hope you're staying safe and staying warm and ready for some online NetSuite activities. But so funny story. We actually were supposed to have a big FBLA event, Future Business Leaders of America event today, and it got canceled. And Dr. Caden informed me of this yesterday, and we've made some plans around this. And I should know by now never to question Dr. Caden. You think that after 10 years of working with her that I would know. Do not question Dr. Caden. She knows everything. But I was like saying, why did they cancel? It just the snow and the rain and sleet's not supposed to happen until the end of the day tomorrow, and they'll be all gone by then. She was like saying, well, I think that the conditions are going to be worse early. Sure enough, get up this morning and icy roads, icy conditions, and everybody slipping around, and people worried about those situations. I was like saying, I don't know how she does it. I think maybe Dr. Keaton is actually God. I mean, that's the only explanation, because she actually knows things before they happen, and she somehow figures it out. But so yeah, I don't know. I've recorded this, and maybe it's a self-fulfilling prophecy. Who knows? But I should probably not mess around with the Almighty if that's the case. I probably should make jokes at their expense. All right, so we're going to start out with NetSuite, so please get logged in. As we're getting started, I want to show everybody, I did do some investigation. I did figure out how you change your password for access. I'm going to throw a disclaimer out. Please do not do this right now. Do this on your own. The reason why is because when you change your password for access, you will want to update, which means you'll log out to check it. Once you log out and log back in, you will have to redo your security questions. And I'm going to continue moving forward as we start walking through. So I want to show everybody how to do this. But if you do need to change your password, if you want to change the default password, I would please ask that you wait to do that until we're doing something else in class or outside of class, or maybe at the beginning of the next class. One of the two. Don't do it while we're talking, because you'll fall behind, and then you'll have to catch up, and it'll be really awkward, and I'll feel bad. So let's go ahead and go to lists, employees, which we should be familiar with this. This is how we actually changed our employee information in the last class period. So go to list, employees, and we're going to find our name, which for me, that's Michael Barnes. For you, if it's something other than Michael Barnes, whatever your name is that you put in here. Anybody put in a name other than their own just to be whimsical, like, just a Taylor Swift or something like that? That would be interesting. We're going to click on edit. Okay, we're going to edit that file. All right. So this is the file, or the employee file that we set up last time. And again, remember, we changed our name and job title. It has some stuff like that. We can actually edit any employee file, which includes our own. And so if we go down here, scrolling down about halfway through, there's going to be a bar over here, and you're going to notice a subtab that says access. So if we click on that, currently it's kind of just saying give access and do not have any password changes, but we can manually assign or change this password. And all we have to do is click on this box. You're going to type in your new password and confirm that password. Now, again, my request is if you do need to change your password, do not do so right now. Again, because you'll update the password. I think you'll still be able to do your NetSuite, but again, the logical conclusion is just log out and see if it changes. And then we have to go through and update security questions. But you will enter the password. You'll confirm your password. It will have to meet these criteria over here and specify those criteria. Then it will change the password. I recommend that you go out, log out, and change it to make sure everything is working properly. And once you've actually got the log back in, it will give you your security questions. And make sure you write all those down so you have those consistently. So that's exactly how we go through the process of changing passwords in NetSuite, which again, I'd never done that before, because usually it defaults to entering the password. So it's just kind of a little hiccup. We'll see if that gets corrected in future versions. But for our purposes, that's how we go through doing that. And again, recommend that you do that on your own, but please do that if you did not change from the default password, because the default password is the same for everybody. All right, so now we're in NetSuite. We're going to go ahead and set up some accounting transactions. So again, as we're going through NetSuite, one of the things that I encourage, please take notes as we're going through each of these steps to know how to do everything, because there will be test questions on these. More directly for this particular process, we're going to be doing some transaction entries today, some direct transaction entries. And you will be replicating these events next week in an assignment on your own. So you will need to know basically what we're going to do today and how to repeat those transactions and how to repeat everything that we're doing today. So I encourage you to take diligent notes on this as we're going through this. And so, yeah, the first thing we're going to have to do is we're going to have to do some setup. So we're going to go to setup, accounting, and manage accounting periods. So down here, manage accounting periods. And once you get to manage accounting periods, click on that. I'm going to leave it here just for a second so people know the route they have to go to. So setup accounting, manage accounting periods. I'm going to go and leave here because I don't really want to make any changes. So interestingly, the version that we're on NetSuite is a pretty new version. Up until about a little over a year ago, we were operating on a version that was 2016 instance, which was kind of awkward because we were doing it in 2022, 2023. You can kind of see we've got a newer version which updated through 2023. Unfortunately, we are not in the year 2023. We're in 2025. So we probably need to have some transaction information for the current period so we can be able to do our analysis in the current period, or our work in the current period. So we're going to set up 2 full years. We're going to set up the previous year, 2024, and the current year, 2025. And it's actually very easy. We're not going to do any changes or any instances, but it's really important we set these up because otherwise we can't create financial reports as we need. So go ahead and click Set Up Full Year. And we're not going to change the fiscal calendar. We're going to stay on the fiscal calendar. It does have the option we can actually do July to June calendar. I'm sure there's probably some customizable options that we can do. But we're going to go ahead and set up 2024. So let's go ahead and change fiscal year into 2024 first. And I know what you're thinking. You're panicking. What about 2025? I promise we'll get there. Okay, we'll promise we'll get there. But we're going to do 2024 standard fiscal calendar. Save. And once we've done that, we should be able to find the periods. Once it gets done setting that up, it will actually have a display. We can click on the little minus sign to collapse this, and we got fiscal year 2024. But we can see it broken down by quarter and by month as well. But if obviously we've got 2024, we probably need 2025. So let's do this once again. And this time we don't need to make any modifications. It can just automatically use 2025. We're just going to go ahead and save again. Now we got 2024 collapsed, and you can collapse that and see 2025. Collapse that. We've got all of our periods that we need set up. Everybody good so far? Okay. So real quick, let's talk a little bit about accounting that you've done so far. And some of you may have done some advanced accounting, maybe even computer-based accounting. But when you were doing accounting back in 220 and 221, when you recorded a journal entry, what did it look like? You just wrote down the journal entry name, and then you wrote down the amount for that the account name, and then you wrote down the amount for that particular account, whether it be the debit or the credit. And they were offsetting inputs for the debits or credits. Is that kind of what we would say is traditional journal entry? So in a computerized system, we do something very similar. But one of the important things to note is that because we are a computerized system, it needs to recognize where the information is flowing. And we don't just necessarily categorize that according to account name. In the simplified version that you've been operating in, something like accounts receivable is one account and by itself. Is that the way you think we would work in the real world? That accounts receivable is just a single account? I mean, you see it presented as a single account in the financial statements, but do you think that in the real world it just aggregates to all a single account? Probably not. I wouldn't say that if I said that that was the case, okay? In the real world, we have a lot of subsidiary accounts for every single customer that would be recorded to. And so these accounts need to be classified or better categorized so we can actually use them frequency. So what we do is we use a numeric distribution system called a chart of accounts, which you may have heard and be familiar with already. But we're going to talk a little bit about what the chart of accounts represents, and then we're going to add an account to the chart of accounts. All right. So let's go ahead and go back to setup, accounting, and then we're going to look for manage GL chart of accounts. Okay. So right over here, manage GL chart of accounts. So go ahead and click on chart of accounts once you get there. Again, I'm going to leave it here so people can find their way. Set up accounting, chart of accounts. So I want to kind of talk a little bit about the way this is set up real quick, and then we're going to set up a new account. So in a chart of accounts, usually this is supposed to be a numeric organization system where accounts are supposed to logically fall within a certain range. Now, these first few accounts are just kind of dummy accounts. They don't really represent actual transaction areas. But you notice, once we get a little bit further down, if you scroll down just a little bit, you hear the first account, it's 1,000. It's cash. And then we can go down and we got some of these cash accounts listed here. Then we got undeposited funds and accounts receivable. And all the way to 1,000, we've got all these transactions. We got a prepaid expense. And then we've got property, plant, equipment, accumulated depreciation, and non-current assets, all the way until we get to 2,000, and then things change a little bit. So if you were to categorize the nature of the accounts that fall in the 1,000 range, what would be a word to describe those accounts? Cash, accounts receivable, property, plant, equipment, prepaid expenses. What are all those examples of? Assets, yes. So the 1,000 range is reserved for asset accounts. You'll notice when we go to 2,000, this is when we start payables, okay? Then we have accrued payroll expenses. We got even a credit card account. Then we've got some transactions down here, other accrued expenses and accrued sales taxes. What are all those examples of? Liabilities. Does everybody kind of see the pattern here? Is that we're classifying these according to a numeric system, but they are categorized according to what the account nature is. Now, this is the way that it should operate in the real world. I will tell you that in the real world, it doesn't necessarily operate that way. As somebody who did a lot of transactions testing when I worked in accounting, there's a lot of messiness into chart of accounts. But as this example chart of accounts illustrates is that we should have a very clean categorization across these accounts. And you can kind of scroll down and see what the categorization looks like. We get to the 3,000s, we notice there's equity accounts, 4,000s are revenue, 5,000s are expenses, as well as 6,000 included additional expenses. And then we've got some various categories that are kind of fall into the other areas that are kind of outside of the traditional ones, such as, you know, unrealized gains or losses don't really cleanly fall into a certain area. And then some other accounts that are kind of, again, examples of dummy accounts. But this is a fairly clean chart of accounts. We don't have any overlap in certain areas, like you don't see liability accounts jumping into thousands range. You don't see any equity accounts showing up in revenue range. It's really nice to have something like this that's nice and clean to operate with because it makes our categorization of accounts very easy. It means that we know exactly where things are flowing to. And we're going to see a lot of this as we assign accounts moving forward. But we're going to go ahead and we're going to set up our own account. We're going to set up a new account. So this account is going to be for automobiles, all right? So naturally speaking, what do you think, what range would this fall under? Assets. It's going to be assets, so it's going to be the 1,000 range, okay? Because an automobile represents an asset. So let's click on new. All right, so for the number, I would like you to type in 1522. And for name, we're just going to call it automobiles. Now we need to set up a few things just for cleanup purposes. So first of all, under sub account, I want you to put in your cursor there and I want you to type in 1520. So 1522 is actually going to be a sub account of 1520, property, plant, equipment, machinery, equipment. But you don't really think about that as machinery equipment, but it kind of is. Automobiles are what we would use for operations to generate revenues. By the way, if you did that correctly, sub account, you will notice that your type changed from an expense account down here to a fixed asset account. So we don't actually have to make that manual change. It should have done this for us, all right? So now that we should have a fixed asset. Also, one thing that we need to change, remember last class period we walked through this and I said that we were going to be setting up a subsidiary for US West and all of our transactions need to flow from US West. So over here in subsidiaries, where it says we currently have set up on parent company, I'd like you to go down and I'd like you to specify parent company United States West. This seems like a very minor thing, but I will tell you it will mess up your transactions if we don't have all of our transactions flowing to the proper subsidiary. Because we are just making transactions to a single subsidiary right now. All right. So again, just to reiterate, account number is 1522. It's called automobiles. It does need to be a sub account of 1520, which will default to this to fixed assets. Once we've got all that set to fixed asset, make sure your subsidiary is parent company United States West. If you have all that in place, click on save. All right. Now we're going to do a journal entry. Now, sadly, we're not going to use that account that we just created, but the good news is you will be using that account next week for your assignment in NetSuite. So if you set this up properly, you'll be seeing it again. If you didn't set it up properly, then you're going to be saying, all right, where's this automobiles account I'm supposed to be making journal entries to? So one you just created, okay? So one you just created, will be your bill for you guys. So let's go ahead and let's talk about how we make journal entries. Now, most transactions that flow through NetSuite are not going to be journal entries of this nature. I know that you're familiar with how to create journal entries, but as we're going to see when we get later on in NetSuite, when we do the second half of the course, our transactions flow naturally from setting up processes. So we talk about revenue process, we talk about how we record a transaction to a customer. That will automatically create a journal entry for us in the system. We talk about a purchase process. We buy something from a vendor, it will automatically create a transaction. And we'll see where those transaction flows by where the account's set up in the different process areas. But we can still create what we call manual journal entries within the system. And these are transactions that we manually generate that bypass the purchase process. It's important to note that when you have manual journal entries within a system like this, these are tracked separately from the ones that automatically occur as a result of business processes. And it's important that that occurs for a reason, because we know that fraud has traditionally occurred through manual journal entry processes. So we need to be aware that these are something that have to be reviewed very thoroughly in detail. We need to scrutinize these types of journal entries. But it's important that we have the ability to create these journal entries because we do need to be able to set them up in certain situations, especially if we're talking about journal entries that need to be reversed or journal entries that need to be updated or corrected. We need to have these procedures in place. So let's go ahead and we're going to create a manual journal entry. This will not be the crux of the journal entries that we'll be doing later on in this course. Those will be automated as part of our processes, but we're going to see what the journal entries look like for these steps. So let's go to transactions. We're going to scroll down to financial near the bottom, and then we're going to scroll all the way back up to make journal entries. I think there'd be an easier way to do that. There probably is, but we're going to go with that. So once you get to make journal entries, go ahead and click on that. The transactions, financial, make journal entries. Suite holds on and just scrolls for a second and likes to go, and I have to be entertaining because that's my job. I could show you, I could do a performance of what it looked like when I was walking to campus today, but nobody wants to see that. All right. So let's go ahead and see what we've got set up here. So we've got an automatically generated journal entry, which we'll see what that journal entry number here is in just a second, but this is really important, okay? It's really important that NetSuite automatically makes these journal entry numbers for us. One of the things, the key of a good information system is that transactions that are sequential in production have a sequential numeric assignment. Why is this important? Why would it be important to have journal entry 440 occur before journal entry 441? Well, if we start looking at journal entries and try to occur when they took place, say I've got journal entry 440, which there's a reason I chose that one. That's actually the one that's going to come up. So journal entry 440 took place in, what month are we in? We're in February, okay? It took place in February. Then I look at journal entry 441 took place in December. Can I determine that something weird is happening if I look at that sequence? Yeah, 440 should occur before 441, not after. So that sequential assignment allows me to look for deviations and things that are that go against expectation. So sequential assignment, very, very important for documentation. We're going to see a lot of that as we start processing different types of documents, different types of transactions throughout this course. So the great news is that the current version of NetSuite does this assignment automatically. We don't have to worry about it. We will see those assignments in a little bit, and we're going to have journal entry 440 will be our default assignment. So we've got today's date, okay? Got today's date. Subsidiary, we need to choose one, so let's go ahead and take out US West. And the good news is once we select United States West, it's going to auto-update some of the information for us. So it updated to US dollar here and posting period over here, so we don't have to do that ourselves. All right. Let's go ahead and create a journal entry. We're going to do the kind of thing that you did back in 220, but we're going to use an information system to do it now. So we're just going to set up our account. And this account is going to be that we're going to be taking, we're going to be charging a transaction to petty cash. Have you heard the term petty cash before in your accounting classes? So petty cash is basically a small cash account where incidental transactions, like maybe lunch for executives or a transaction to pay for a minor expense takes place. We're going to be recording a petty cash transaction. Okay, so let's go ahead and type in the following. So I want you to type in debit 6081. So actually, you just need to type in 6081. It'll debit automatically here in just a second, but type in 6081 into account. That should be operating expense, miscellaneous expense. Now you can tab through this and then we'll actually move to the right. And we could put a lot of information in here. We could put department, class, location. We're not going to worry too much about that now. In practice, we would use these as necessary, but we're going to ignore those for the time being to try to keep this simple. Go ahead and just tap over to get to debit. And we're going to be debiting $200 here. Now, in the classes that you've done before, are expenses traditionally debited? Yes, okay. Accounting classes done before, expenses traditionally a debit account, okay? Which will make sense when we talk about our credit here in just a second. Now, we can actually assign a name, and in most situations, we would actually describe what the transaction is, which would be a memo. Since we're doing very simple journal entry here today, we're not going to do any of those. Now, for the journal entries that you'll be doing next week, you will have to assign some descriptions, which will go into this memo field, where you can just type in something to actually describe the nature of your transaction. So I wanted to actually introduce you to those, even though we're not necessarily going to be using those today. But what do we know about every debit? Every debit has to have a corresponding credit. So we still need to credit something because we can't just leave this by itself. So now that we put in our account and our debit, that's all we need for this particular line. Let's go to add. Click on add. And I want you to type in 1040. And you will notice that it says cash, petty cash. So let's think about what the nature of this transaction is. We are expensing something to petty cash. We're saying we had a transaction where we engaged in petty cash and we're debiting expenses. Now, typically speaking, this is actually a forward transaction. And what that means is that we're replenishing something in petty cash. So we have cash to use and we're recognizing the expense up front. But technically speaking, we're recognizing the expense of cash. So if we're trying to actually move cash from one cash account into a petty cash, does it make sense that we'd actually be reducing petty or moving out of petty cash to recognize the expense transaction? Yeah, so expenses generally incur a cost, and the way we pay cost is to pay cash, or to usually recognize a payable that we'll eventually have to pay in cash. So we're actually recognize a reduction of cash. We'd have to replenish this cash at some point because petty cash would come up, but for right now, we're just recognizing the reduction of cash from petty cash. So this is going to be our credit, so we can tap through, we can just click over on credit. And it recognizes that we've already got a debit for $200, so we need a credit for $200, so it enters that amount. Now you'll notice this is not absolute, that if we wanted to change this, we could. Is it possible that I could pay cash from multiple sources for a transaction like this? Yeah, so say for example, I wanted to pay $100 from petty cash and $100 from another cash account. I could do that, I would just change the entry here from $200 to $100. All right, so it's not set in stone and absolute until we actually get the journal entry set up. But this is fine. We're just going to leave it like that. 2 lines, 1 to 6081, 1 to 1400 or 1040. And both of these are going to be debited and credited for $200. All right. So for posterity, let's go ahead and click on add. And this will actually add another line. Now it's blank right now. We don't have anything else that's going to come in. But we notice everything has been created that we need. So now that we have this journal entry, let's go ahead and click on save. So we're saving our journal entry so that we can actually have some sort of transaction to list this out. It's important to note that in our current system, we are operating in what we call a batch processing system, especially for manual journal entry transactions. And that basically means that when the journal entry gets created, it doesn't necessarily get recorded to the financial statements automatically. There's a separation between the creation and the posting of the journal entry. So we have a journal entry that's now in the system, but it's not recognized in our financial transactions just yet. Now, this is really important that we have this feature because we can have somebody review this transaction and approve and authorize the transaction before it gets posted. If they don't like the transaction, they can say, no, we're not going to accept this transaction, delete it, all right? So let's take a look really quickly at the transaction, what we would do in the next step. Okay, so we're going to go to the same thing, transactions, financial, make journal entries, but we're going to scroll one over and we're going to go to list and click on list. So it's the same route, except we're going to actually going to list out this time. So we're not creating a journal entry. We just want to look at the list of journal entries that are that have been created. And you'll see that we've got a lot of transactions here, a lot of journal entries. We're looking for the last one, which is journal entry 440, which should be at the bottom of our screen. Now you notice that our status is approved for posting. So the approval of journal entry occurs automatically within the system. It has not yet been posted. So if we wanted to, we could go ahead and we could delete this journal entry. Do not delete this, by the way. I'm going to show you how, but please do not delete the journal entry. It's going to make the next step really difficult if you do that, okay? So if you scroll over, there's a green thing, okay? I don't know if I describe it. It gives us some tasks. It could say delete the record, which basically would be somebody reviewing this journal entry saying, I do not want this to get posted. I want this record gone. All right. And this would create some interesting scenarios if we deleted that, because the next journal entry would be 441, and we'd say, what happened to 440? We'd have to look at a journal entry deletion record to find out, oh, this did not get approved, it got removed from the system. So right now, this is pending approval. It's just kind of sitting there saying, we want this to go posted at some point, but it needs to actually get posted. So it's in the system, not part of the financials yet. That's where we're at. And we're not going to make it part of the financials. That's a step that we would go through in another part. We could, but for the most part, I just wanted to show you here what the difference between creation of the journal entry is and the subsequent posting of the journal entry. Those are two separate steps. All right. So what would we want to do? Well, if we got this approved for posting, we probably want to send this to somebody and say, we would like this to get posted. And they would like to say, I would like to look at this transaction so I can review the nature of it. Typically, this is not going to be a single transaction. For manual journal entries that occur within a period, usually there's going to be a review process for everything. So the question comes up, could we create a report that allow us to review everything that was manually created? And the answer is yes, and I'm glad that you asked, because that's our next step, okay? So let's go ahead, let's create a report. So we're going to go to Reports, Financial, and Transaction Detail. And you can click on Transaction Detail once you get there. Reports, Financial, Transaction Detail. Now this is a customizable, there's a detail where we can create customizable reports from of all transactions that are in the system. This used to be a lot messier and we had to go jump through a lot of hoops when we did the analysis in here. NetSuite has cleaned this up quite considerably. They've provided a lot easier detail to read. We're going to create a customized transaction detail report, which we're in the transaction detail. You can probably guess that we're going to click on this customize button down here at the bottom. So go ahead and do that. Now, there's a lot of ways that we can actually set up customized transaction detail. There's actually 4 different views that we have. This is where things get really confusing. So please make a note of this. You will need to note this for next week, and you'll need to note it now, because I always get questions about this because somebody misses me saying this. So this is the point where if you're online and you're doing something else, pay close attention. If you're in the classroom and you're looking at a text, stop looking at the text, look at me, okay? So we are going to go directly to filters right here, all right? So click on filters. If you stay in edit columns, you're going to be completely lost about what we're going to be doing next, okay? And I don't want anybody to be lost. So we've actually got filters for our setup reports. We would like to specify the one transaction that we just created. Does anybody remember what the journal entry number was, by the way? 440, okay? So we're going to actually identify that journal entry. We can actually add a lot of different fields, a lot of different parameters for finding reports. If you wanted to find everything that was a manual journal entry to a specific account, we could identify by account. We can identify by date. This one's going to be a very easy one. We're going to identify by transactions. So we're going to, by transaction number. So once you click on the plus next to transaction. And by the way, this just to make this easy, just for this time being, what I'd like for you to do over here on the right, scroll the bar down so we can see the description that's occurring down here. This will actually help with an explanation of what you need to see here in just a second. So we're going to go to document number. Does anybody notice a problem with using document number as a filter?
Document number.
There are 2 document numbers, which means they probably do different things. So here's what I'd like for you to do. Do not click on document number, but go ahead and scroll over it. Let's go to the first one. So this one says that this document number filter is a custom field created for your account. Did we use custom fields in the creation of our journal entry just a few minutes ago? Did we set any customized fields? Did I say, hey, we got to customize something? Or did we just use the chart of accounts? Yes. So this is probably not what we want. So let's look and see what the second document number says. A transaction number that is automatically assigned or entered on each new transaction record. Is that something that was created? Yeah. We didn't create a customized number. We just used the sequential number that was automatically assigned. So when you select this filter, you need to select the second document number. If you select the first one, what we're about to do will not work. All right. So let's go ahead and do a very simple filter. Then we're going to come back and we're going to do a slightly more complex filter. And the reason I'm going to do a more complex filter is because it's going to be important for what you need to know for next week. So we're on document number. We know that our document number was journal entry 440. So type in JE440. That's it, okay? That's the simple filter that we're going to create. We're going to click done. Click done. There we go. Now we can actually see what our report looks like. So let's just go ahead and click on preview. And it's creating our customized transaction detail. Now we've only selected one journal entry line, so it should be 2 lines. Our debit and our credit should be what come up. My NetSuite's really struggling. Hopefully yours are a little bit cleaner, a little bit quicker. But did everybody come up with 2 lines on their report? Yep. So that's what we're looking for, just something like that. Now, it doesn't really matter if it presents the debit first or the credit first. I do know some people have gotten really wound up because their credits have shown up first, and it's like saying, did I do something wrong with the report? No, it's just fine, okay? It depends on how the system picks information, and you can actually pick it in any order. But this is what we want right here, all right? That being said, let's go ahead and return to customization, okay? Click on Return to Customization down here in the lower left. What I'd like to do is I'd like to change the filter slightly, because in some scenarios, we may want to look at a range of transactions as opposed to a single transaction. So let's go ahead and click on the filter again. And instead of saying equal to, what I'd like for you to do is I'd like you to click on between. So we default to equal to. Equal to is our default. We're going to actually select between now. Now, this is kind of pointless because we're only using a transaction, but I'd like you to type in for our type in JE440, and then also JE440 from the two. Which again, there's no point in doing this for this particular transaction, but it will have a very strong relevance for what you need to do moving forward. So go click on done, and we click on preview, we're going to get the same exact result. All right, everybody to this point right here, feel pretty comfortable with this? Okay. So this is your submission, is this custom transaction detail report. However, we're not going to do a screen capture, okay? We could, but we've actually got this report, and if it's a report, it probably should be something that can be delivered externally. So what I'd like for you to do, is I'd like for you to click on the Adobe icon, the Acrobat icon that says Export PDF. We're just going to click on that, and it's going to create a report for us. Let's take a look and see what that report looks like. It should have your company name at the top, should have the date range, and those 2 transactions there. Please make a note of this. This will become very important later on. Moving forward, I believe this is true for all of our submissions. Don't quote me on that. I could be mistaken, but I believe for every transaction submission, or every submission we're going to be doing moving forward, you will need to submit in PDF form. All right. Now for this is really easy because we just created a file as a PDF file. So you can submit this directly to Brightspace, and that you're done with today's assignment, okay? So the reason I mentioned this, that everything should be submitted as a PDF, is that later on, we're going to be doing transaction detail, we're going to be doing report details for certain process areas, and it's going to default to different parameters. It's going to actually show us a file, and if you save that file as it is, it is not readable in Brightspace. I can't open it up and see if you did a transaction. In fact, it's only open in both, it can only be previewed in NetSuite. So basically, my GTRA who does not have NetSuite access is going to be trying to grade your assignment, cannot see your assignment. Guess what you'll get for the assignment? 0, okay? I will remind you of this as we move forward. I will say it for every single instance. Every single submission moving forward should be submitted as a PDF. It's not particularly difficult to do, but you need to make a note of it because I want to be able to preview it in Brightspace. I have questions about something. As far as the individual parameters, like say, for example, something comes up and you say, okay, the credits before the debit, is that a problem? Generally not, okay? As long as all the required elements are there, the sequence does not matter all that much. Things do pop up by happenstance. I can't explain all of them, but for the most part, this is what we're looking for. So if you've got this PDF file, save the PDF file, and then submit this to Brightspace for your assignment, and you're done with today's assignment for NetSuite. Before we get too much into that, though, let's do one last thing, okay? So I want you to return to customization. And I'd like you to click on Save once you're back in customization. The reason for this is this actually sets up a new transaction detail file, which you can use as a you can use in NetSuite as kind of a template for creating future reports. Now, we're not going to do that. You're going to be creating your own new set of reports for next week's assignment. But if you ever wanted to replicate this process for a new set of journal entries, you actually have this set up now so that you can do this process much easier than having to go through all the steps that we went through. And this is particularly important if you've got a series of reports that have got multiple filters and you want to replicate that multiple times. Saving the template will be very helpful. All right, so that's the end of NetSuite for today. Again, you'll want to create this PDF file, save this PDF file, and upload this to Brightspace, and that's your submission for today. And, again, let's do it technically on Friday, but everybody should be able to complete this pretty easily today. Any questions before we move on to homework? All right, it's time for me to blitz through homework assignments. All right. So advantages of relational data models generally include what? What do you guys think? Reduced information redundancy, is that an advantage of a relational data model? You better believe it, because we're only storing most information in one spot, so we don't have to have multiple places stored. Low cost is generally not characteristics. It generally is higher cost because the technology requirements higher. It's definitely not easy to implement, especially on conventional processing systems, because you do have to do a lot of changeover. And the efficiency is generally not going to be as efficient as some systems, but it's definitely more adaptable. All right, question number 3. A class in a relational database model is defined as what? So I'm just going to read the answer because this is pretty self-apparent. A person, place, thing, transaction, or event about which information is stored. C. Is everybody consistent with that one? Everybody identify that pretty easily? So let's go a little bit deeper to make sure that we go into the detail on this. Most classes are going to be represented as entities. By definition, what are entities? There are 3 categories of entities we've talked about already. So they have initials of R, E, and A. Resources, events, and agents. Are there classes that do not necessarily fall into entities? Yes, those are called conceptual structures, and those are items about anything that are not REA that we want information about, okay? So all entities are classes, but not necessarily all classes are entities, okay? That's important to take a note about. Then I felt whimsical, so I would jump all the way over to question number 12. Which of the following is a valid primary key for a cash receipt table? So primary key is a unique identifier. What do we think is probably the easiest primary key for a cash receipts table? Probably something that has to do with cash receipts. Yeah, we're going to go ahead and say cash receipt number is probably going to be the best one here, okay? Best one here. We're going to come back to that. We're going to talk a lot about primary keys and foreign keys here in just a second. So question 16 says, which of the following is a correct statement about primary keys? And I meant to open this up because I wanted to have our file open for we have our rules here. So let me go ahead and open chapter 4 and get onto our rules about primary keys and foreign keys. Everybody remember this table right here? So I said this table is really important. You need to know all the rules on this table. This is going to be very helpful for the homework as well. So going back, following create statement about primary keys. So it says, A, the data values of a primary key must be different, i.e. unique. What do you guys think about that statement? That is a true statement. I like that statement, but let's go through the rest. A primary key is always another table's foreign key. No. In fact, remember, primary keys have to have very specific setup to be a foreign key in another table. Has to have a one-to-one relationship. We do know foreign keys can be null, which means that there's going to be situations where there's not a primary key. So there's going to be problems with that. A primary key cannot be used in another table as a foreign key. Well, actually, a primary key is going to be always a foreign key if it's used, okay? Or a foreign key will always be a primary key from another table. Most tables in a database may not require primary keys, okay? I will say there are tables that do not require primary keys, but that's very few of the tables. And those are tables that are created as a join of other tables within the database. So we could say some tables may not require a primary key. Most tables will require a primary key. That's the difference in that statement. Question 17, which of the following is a correct statement about foreign keys? All foreign keys cannot be blank or null. Is that a correct statement? No, we know that foreign keys can be null. It's a possibility. We explained that on Monday. Most foreign keys cannot have any data values. Well, I would assume that if they're foreign keys, they probably would want to have most of them with data values. The occasional one that doesn't. A foreign key must be another table's primary key. What do you guys think? That is a technically not a correct statement, but I'm going to say that's our answer. The reason it's not technically correct is because we have the caveat of saying that a foreign key could also be a combination of primary keys from another table. So if you want to get really, really dicey into it, you could say C is not correct. And if you were thinking about that and saying, I don't think that's correct, I like the way your mind is at, but we're going to say C is the most correct answer here. Keep in mind that we can have a combination of fields as a foreign key, but for the most part, it's going to be a primary key from another table. Attribute cannot have a quarter foreign key just used in different tables. That's not true. We can actually have it used in multiple tables. All right, referential integrity rule. Let's go ahead and take a look at that. Referential integrity rule, foreign keys must either be null or match one of the data values that exist in a corresponding table, i.e. has to be a primary key from another table. All right, so referential integrity rule, foreign keys, the primary keys cannot be null, no. Foreign keys cannot be all, no. Data values in a forging key can always exist in a coin table. I think that's supposed to be a foreign key and not a forging key, but that's weird. That's not the correct answer. So foreign keys could be null. That is the referential integrity rule. That's one of the parts of it. Which of the following is a correct statement about the entity integrity rule? Let's take a look at the entity integrity rule. Primary keys must have data values, cannot be null, unique identifiers. So entity integrity rule, we're looking for the one that has to be identified. So a primary key cannot be null, which is going to be C. Question 22. Which of the following is best key for a cash disbursement table? Probably something that has to do with disbursements, won't you think? Okay. So what do you say? Disbursement voucher numbers make sense of that? Again, unique identifier. That's the most intuitive and makes sense. I realize that's a very simple question, but it's a very important question to ask. All right. Question 23. Which of the following could be an event in REA data models? So an event is defined by something that commences a transaction. Okay. So what would be an example of an event? Cash. What is cash an example of? It's a resource. Okay. Sales. What is that? It's an event. Okay. So that's our answer. Customer. What's that example of? Agent. Good. Inventory. Another resource. Okay. So it's a good idea to get into the habit of making sure you know those. Question 24. Which of the following could be a relationship table? We looked at relationship tables on Monday. Remember, relationship tables are when we have two tables where we can't identify a foreign key to match those tables, but we want to understand the relationship between those two tables. We know that data exists common between the two tables. Our example was having the author and the books, because we know that books had multiple authors and authors had multiple books. So we created a table to identify those relationships. So which of those would be example? It would probably be an example of items that have, or a table that has multiple items as the source of that table. So purchase line item table would be a good example of that, because we're identifying each of the individual line items that occurs within purchases, which would be each individual item in the transaction. All right. Which of the following is not a valid link between tables? I actually really like this question here. Keep an eye out for questions like this, because I will ask you to try to not to trick you, but to make sure that you're looking for valid relationships. So linking sales and inventory tables, is inventory often involved in sales? Yep. Okay. Purchase tables with cash disbursements. Do we have cash disbursements when we have purchases? Yes, we do. Okay. Salespeople with customers. Do salespeople interact with customers? Yes. Vendor table with customers. Do our vendors generally interact with our customers? Unless your company name is Amazon, the answer is no. Okay. Amazon, all the rules are out the window, because yeah, they have their vendors often send directly to the customers. But for the most part, the answer is no. Okay, it's not a valid link here. All right, moving on to our problems. So When roll it out on the problems on question 15, all right? Contains 7 attributes. Which of these could possibly be foreign keys? So remittance device is our primary key. Let's just go through the rest of the keys and say, could these be foreign keys? And talk about the caveats to those, all right? So we have a date listed here. Could date be a foreign key? No, date's not a unique identifier for transaction. What about amount? No, not at all. Could customer be a foreign key? The requirements of foreign keys is the primary key from another table, and it's got a one-to-one relationship in this table, all right? So would we say that each remittance device belongs to one and only one customer? I would say so. So customer seems like it could be a very good foreign key for this table. What about check number? This one's tricky. Is check number a unique identifier? It is for our customers, but not for us, because we could receive a check from multiple parties and check would be 101, okay? And you have multiple check 101, so it's not a unique identifier, meaning that the table it came from is not a primary key, okay? So check would not be a good foreign key here because it's not a primary key from another table, at least not in our database. Invoice. Invoice could potentially be a good foreign key. We do have to throw the caveat out there that each remittance has to have one and only one invoice. If remittances can have multiple invoices, then we could not use this as a foreign key, because think about it. I had a remittance device listed out here, then I'd have invoice 101, 102, 103, 104. And that would violate one of our rules, which is that each attribute can only have a single value. Each attribute of a record can only have a single value. So assuming that the one-to-one relationship exists, yes, we're good with that. What about cashier number? Cashier number, maybe, okay. So if cashier is associated, one cashier associated with each remittance advice, then we're cool with that, okay? Because this would be a unique identifier, a primary key for that, okay? Again, it depends on whether or not we have multiple cashiers in the transaction. So again, critical concern here, but I think possible ones we can identify: customer for sure, invoice and cashier possibly, depending on the scenario. All right, moving on. Sales invoice typically includes the date of the sale, salesperson, customer data, items included in the sale, and the amount. Which of foreign keys should be added to the following tables to link all these data elements? All right, well, what are some items that are listed up here? It says date of sale. Would date of sale be a good foreign key? Well, it's included in here, but it would not be a foreign key. For that matter, amount would not be either, okay? But it gives us some other ones. It says salesperson and customer data, okay? So salesperson, if we have like a salesperson number, would that be a good foreign key? Yeah, if we have like a table of salespeople that are in the organization, and assuming that only one salesperson is involved in each sale, this would be a good one, because then we'd say, all right, salesperson number is listed over here. We want to know the details of that salesperson, their name, what department they work in, some stuff like that. We can link those tables together. All right, then some customer data. So do we have a customer number? Customer number, would that be like a primary key in a different table? Like a customer ID table? Yeah, so that would actually be another one. It's kind of the same as a salesperson table, but the customer side. Assuming, again, one customer for one sale, which is a pretty natural assumption. What about inventory number? Okay, they're going to buy inventory items, and so I want to put inventory items here. Would that be a good foreign key for this particular table? So how frequently do you buy just one inventory item in a sale? How many times do you go to the grocery store and say, buy an orange? Well, I'm done for the day. I mean, sometimes it happens, but how frequently does it happen? Not very, okay? So inventory is going to violate that rule of only having one record or one item. If we assume that it's an entity where there's only going to be one item purchased for each transaction, then it could be, okay? That's not a likely assumption in this scenario. What about remittance advice? Okay, so we talked about this over here, the remittance advice up here. So could remittance advice be actually a foreign key in the invoice table? It could be, but again, what assumption do we have to make? That there's only one invoice for every one remittance advice, okay? If we violate that, if it's a one-to-many relationship or a zero-to-many or anything that's not one-to-one, then that would violate the rule and we cannot use a foreign key. So some interesting activities to reinforce what we learned about primary keys and foreign keys. Hopefully that all made sense and you picked up on those because this will become something very important moving forward. All right, 12:20, exactly time. I'm so happy. All right, have a great day. I'll see you all on Friday.